Hello and welcome to Asking for a Trend. I'm Josh Lipton. For the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving right into. The S&P 500 hits its longest losing streak since August. This is coming amid the broader market sell-off, and the Dow was the worst performer. The buck in the downward trend, crypto, Bitcoin rebounding after dropping below $90,000 earlier on Tuesday. We're looking at the broader market trends and whether NVIDIA's results can help boost the market. The AI trade front and center, and it's been a busy day for announcements. Anthropic and Google among those making headlines, but so is Microsoft. We're taking a deeper dive into the tech giant's rollout at its Ignite conference. Well, Microsoft is rolling out a wave of new AI upgrades across its Microsoft 365 suite as the company looks to wring more value out of its massive AI infrastructure. Joining me now, we have Charles Lamanna, Microsoft President of Business Apps and Agents, and Yahoo Finance tech editor Dan Howley. Guys, welcome to you both. Charles, I'll start with you. Made a lot of news today, Charles. You debuted here a number of updates for your AI-powered Copilot. Fill us in, Charles. Walk us through the news. What do we as investors need to know here?
Absolutely. Really exciting day. We have a great partnership with Anthropic that we expanded. So now that you can use the Anthropic models right alongside OpenAI models inside of GitHub, Microsoft 365 Copilot, as well as our platforms like Azure Foundry and Copilot Studio. So a lot of great enhancements there. Another big announcement was something called Agent 365, which is a unified way to manage all the agents that you deploy in the enterprise. And that's something that extends and integrates rather smoothly with our existing security and management offerings here at Microsoft. Idea being a platform for people, devices, apps, and agents, all unified and all kind of the existing capabilities.
So Charles, it's Dan here. We hear so much about Microsoft's AI. Can you just kind of level set for us? What does that kind of mean across the productivity suite, right? So where would you find the AI capabilities right now?
Yeah, I mean, one of the big things that we're focused on is bringing AI where people already work. So it's this idea of if you're inside of Outlook writing up an email, or if you're in Excel analyzing data and doing forecasts, or if you're inside of PowerPoint building a presentation, don't make you go somewhere else, a different chat experience and copy paste content around, but instead bring Copilot right where you're doing that work on a daily basis. So that is a big focus. Another thing is we have all these agents which help you process things in the background so you can dispatch work and automate tasks even if you're not interacting with the chat in real time.
And what does that kind of mean for companies that are signing on their employees? Is it a way for them to just kind of access their data in a new place? Is it making them more productive? How has this kind of rollout gone so far for companies that have signed up for it?
Yeah, so the big thing I would say is to get the most value from your data, it's not just good enough to have the data as it is. You want to have some kind of preparation and indexing on top of it, which makes it more useful. That's one of our big announcements today as well, something called Work IQ. That way all of your office data, your content, your emails, we're able to package it up and make it accessible for Copilot and AI agents. So that's one part of it. And the second thing is you're going to get the most value from AI if you start to change how you work. So not just doing what you're doing in the past a little bit faster, but start to rethink processes and workflows to get ready for the future.
So when you talk about the new ways of work, is it where, when you think about Microsoft's AI, it's more about augmenting users rather than replacing workers? How does that kind of work?
Yeah, we focus on kind of two things. Copilot, all about enhancing kind of individuals with AI. So it's very much about the extending how people work today. And then we have all these agents, things like researcher or analyst or sales development agent, which can work in the background. So it's almost like you have a team of AI systems that work on your behalf. And kind of those two things combined, so you can not only start to automate a bunch of processes and tasks, but also start to kind of augment every single person inside the organization.
Okay, so say I start up my day. What does that look like then if I have this kind of capability installed? I'm a regular Joe who goes into, Office X, not X Corp, but you know what I'm saying.
Yep. No, I mean, the way I started, and I think many of our other customers and users started, is you go to Copilot, you ask it, what do I have on the agenda today? What do I need to be ready for? How can I get prepared? And it can go look across all the data that matters most to you, your calendar, your messages, your meetings, the emails you've received, the documents you've been working on, the presentations you've been working on, and then create a great view as to how you're going to be spending your time that day and make sure you're prepared for every part of it. So that's one element of it. Second thing is, as you think about like a lot of the common tasks that we're all going to be doing for classic office work, preparing a presentation or analyzing some data or writing an email, you can go lean on Copilot to help you synthesize information, research information, and then go generate content and get it done faster. And the last thing I would just hit is workflows aren't always just about moving content around. It's also about interacting with sales processes or financial processes or supply chain processes. And what we've been doing is taking Copilot and our agents and connecting it to those things as well. That way you can kind of follow out and drive the specialization that you need to actually get the business outcomes in terms of higher sales or cost reduction or more efficient supply chains.
And then just as a final, I just want to go back to the Anthropic deal. Does that mean that now you're going to be able to choose from Anthropic's Claude models? If you're building out models in the different Foundry that you have, how does that kind of work?
Yeah, absolutely. So our big focus is we want to give model choice to users. That's what people expect. So inside of GitHub Copilot, you can choose between the Claude family of models or OpenAI models and many other models that we expose. Inside of Microsoft 365 Copilot, you're now able to switch and choose the Claude models when it makes the most sense for your scenario. And inside of Foundry and Copilot Studio, when you go create those agents, you'll be able to very easily choose whichever model is the right one to get the job done.
All right, Charles, Dan, thank you guys both. Appreciate it.
Thank you.
Now here's a look at some trending tickers on Yahoo Finance. First up, Warner Brothers Discovery, the clock ticking toward the Thursday deadline for companies to make formal bids to acquire the media giant. WBD shares spiked intraday on a report that Paramount Skydance was getting ready to submit a bid as part of a group with a trio of sovereign wealth funds from the Middle East. But Paramount Skydance pushed back, saying the report of a consortium is categorically inaccurate. Shares of both companies closed higher on the day. We're also watching Meta, which secured an antitrust victory. The Federal Trade Commission trial centered around WhatsApp and Instagram, with the government alleging the tech giant held a monopoly in social networking. The judge saying in his ruling that the government failed to prove its case because it needed to show the monopoly as the company operates now, not only when the case was first filed 5 years ago. Stick around. Much more Ashford Trends still to come. Stocks closing lower, with the S&P 500 notching its fourth day of losses. Yahoo Finance's Jared Blikre joins us now with the trading day takeaways. Jared.
Thanks. We got to talk about those bears. They are not hibernating just yet. And a quick recap. I know we've talked a lot about the 50-day moving average recently, and today is going to be no exception. Here is the year-to-date in the S&P 500. So yesterday we crossed just below, but we are still kind of kissing that line. Well, now we are definitively below it. And what stands out here, we've been above that line since the beginning of May, and so that's why there's so much talk about it. And critically, I said yesterday, the SOX, the Philly Chip Index, closed above it, and so did NVIDIA. Well, guess what? Both of those closed below today. So here's the Philly SOX Index finally closing below that. Pretty similar to chart to the S&P 500, but a little bit higher beta. And I just want to show you the sector action. This is today, but what I want to go to is a quarter to date. So this is since the beginning of October, also captures the entire shutdown period. XLV is healthcare, utilities is XLU, and XLE is energy. So pretty defensive setup looking here, and not a lot of people were expecting this coming into the fourth quarter. Biggest loser here, consumer discretionary. Amazon just had a terrible day, down 4%. Communication services, another mega cap sector. And tech, well, tech's only down 1%, so that's actually kind of a bright spot right now. Also want to say that I have another clip from the Investopedia editor-in-chief, Caleb Silver. We talked to him about some of this downside action that we were seeing yesterday, and here's what he had to say.
there's a little bit of a sell-off here, but don't forget, investors have had a great run riding about the same 10 to 12 stocks for the past 2 to 3 years, really since this bull market began in late October of 2022. A little selling here, end of year, maybe rotating out into different sectors of the market, not crazy. Also, there might be some catch-up play from those global fund managers that were bearish for so long, so we might see this balance out over time.
Global fund managers, how about that?
Yeah, now speaking of global fund managers, didn't we get some new data, some new insight there?
Yes, once a month we get B of A. They produce what's called the Global Fund Managers Survey, and we got that today. It had some really interesting data points. Not unexpected, first of all, is that the most crowded trade is the Mag 7. Now, these guys who they survey manage $500 billion of assets, so these are some of the top money managers in the world. What's interesting is that also the biggest tail risk is related to the Mag 7 because that would be the AI bubble. So they're making a lot of money with the Mag 7, but they're also worried that the party comes to an end at some point. Now, when does it end? And this is where it gets interesting. The cash levels of these money managers have reached the lowest percentage, 3.7% since 2011. And when they get to those low levels, a lot of times that's a contrarian signal. So they've spent so much of their money, they have so little cash that guess what? The market can correct afterwards. And so it doesn't say the magnitude of the correction we're expecting, but that is something that's kind of like a yellow warning flag to me. One more. Record number of respondents saying that companies are overinvesting, and the beginning of their data is 2005, so this does not include the dot-com era, but it has never been positive, and it was wildly positive this time. So in other words, up until this most recent survey, all the companies were saying there's not enough investment, and now they're saying too much. So that might be...
That's interesting.
Yeah, that is as well. So that's pretty much the survey in a nutshell.
Back to the markets, where are the risks?
I was looking at the VIX today, so let's check out the VIX, which is saying hello to me. It has my attention, and here we have a year-to-date in the VIX. Here's the most recent spike, and you can see it's about the same magnitude as that little scare that we got in the middle of October that had to do with China tariffs that never really came to fruition. But here is that big outlier. We saw that. That's the post-Liberation Day spike in volatility. That's when we had that big market sell-off. So this is catching my attention. Now, when you put it down to a 3-month chart, you can see it's kind of staying elevated here. So as a quick reminder, we see an elevated VIX not only in October, but also November. Then we see it decline into year end. So we could still have some market spills in the month of November. Want to show you one more thing, which is the ICE B of A Move Index. This is like the VIX for the bond market. And here we are seeing the highest level in about 2 months. So the bond market has not been crazy, but if this starts going much higher, I'd have my eye on it. And just to give you some perspective, okay, we're not nearly at the levels that we were during that post-Liberation Day sell-off. So not too much to worry about there just yet.
Should we end here quickly on crypto?
Oh, I'm glad you said that. Bitcoin had a positive day, I believe. I mean, things changed rapidly here. Let me just get to our intraday. Here, up only 1% over the trailing 24 hours. I think we may have a temporary support level at 90,000, but I think the short sellers are still going to get interested here. I would watch this all the way up to 100K because you don't know where the short sellers are going to come in exactly, but they have been doing a very technical sell-off. I look at fib levels, and right where you think they would be coming in, they have been coming in on the way down. So anything below 100,000 just gives you the more risk of more downside here.
All right, thank you, Jared.
You
Appreciate
bet.
it, buddy. Stick around. Much more Ashford trends still to come. The crypto market has had a very volatile few weeks here, hitting a peak of $126,000 per token in October, then briefly falling below $90,000 last night. CEO of crypto exchange Kraken, Arjun Sethi, joined Yahoo Finance's Invest event to discuss how the market's changes affect his business.
The more it goes up, there's speculation around it, so people get interested in it, and then they try to buy the asset. When it goes down, you tend to get a little bit more negative news, but that's across every asset class, crypto, ETFs, stocks, shares, et cetera.
So are you concerned at all that with that volatility that, that there is this drop in traffic, and how long do you think that this drop in crypto could last?
Yeah, so for our platform, we have over 400 plus crypto-related assets. We have all of the stocks and ETFs in the United States, as well as some international stocks that are going to be on the platform soon. So for us, it's across the board. One thing I think that's important is if you just look at the general slope of crypto, Bitcoin from 6,000 to 15,000 to 25, back to 8 to 50, back to 16, then 80, et cetera. You always have these curves that have continued to change for all asset classes. And I think what's much more important is what is the thesis behind why you'd want to buy Bitcoin or Ethereum or any of these assets versus hold a dollar or any other shares.
And do you think that sort of philosophy or reason for buying it, that is going to expand regardless of what happens to the price?
Yeah, there's going to be micro and macro cyclicalities across all jurisdictions. So the U.S. perspective is that we'll take a look at traditional markets, but we're in Australia, Canada, United States, UK, Greater Europe, et cetera, and then the rest of the world. All of these markets, in some cases, they don't have access to their own equities markets. So they're looking to buy assets that they consider safe. Most of the time, those assets are US assets. And crypto is one of those as well. So Bitcoin, Ethereum, the alts, Solana, et cetera, become sort of more synonymous with safety over time. And then the next phase of safety has been US Treasuries, which are stable coins, and then tokenized equities have been like a huge boon for us and other platforms as well, which is essentially similar to US Treasury as an asset that's safe. People want access to McDonald's, S&P 500, NVIDIA, et cetera. And I think that's great because you're leveraging the global liquidity, global access, global distribution through any global platform out there to be able to get access to these assets no matter where you are in the world, no matter what platform you use.
I do want to get more into tokenization, but first to kind of take a step back here for people who aren't as familiar perhaps with Kraken. You guys have a lot of traffic internationally as well. There are a lot of crypto platforms now. As I mentioned, you guys have been around for a long time, but there are a lot of crypto platforms that are accessible here in the US, and we're seeing an increasing number because existing platforms like a Robinhood, for example, has gotten more and more into crypto. So how should people think about Kraken? What is the identity of Kraken versus some of those other platforms?
Yeah, so I'd take a step back in that the TAM is large, right? The total addressable market around how to get people access to these financial products in the first place. So over time, you've seen a lot of these fintech companies just give broader access, underbanked. You have neobank services, et cetera, sort of converging on giving people access to any type of yield or savings. So the way to sort of think about it is you have all this open access. We talk about open internet, open banking, et cetera. Well, worldwide, that hasn't really happened that much. And so the first new movement worldwide in terms of distribution is mobile phone access to internet, and now global internet capital markets, which is essentially crypto. And then you're moving assets into that. And so we've been worldwide since day one. We've been fully remote since day one. So it just gives us access to a larger pool of customers. I think what has always made us different, frankly, is outside of core features is our culture. So what do we stand for? We stand for your property and your money is yours. It's your sovereign property, similar to how we think about our own freedoms and assets here in the United States. We want to be able to bring your assets, similar to how we think about crypto, is like it's interoperable. You can move it the way you want to. If you want to opt into a program that gives you a certain amount of yield, then you go to who you trust. And so we're vertically integrated in that way, which is we're an exchange like NASDAQ, and then we have an interactive broker style platform for you to be able to use our products to be able to buy any of these assets that you want. And so crypto is where we started. Crypto native is how we were born. But those principles are what carries us for all the other products that we give access to. So, a lot of people talk about financial inclusion. I think of it more as how do we get more and more participants to get into the ecosystem. Crypto is the rails in the back end for us, and in some cases it's freedom to do whatever you want with your money. But the ability to have freedom to do what you want with your money is to be able to have forward mobility in the first place. So at a time when we're talking about, how do I participate in the capital markets, we're talking about socialism in some cases, what do I actually get for my money and who are the services that I use? I think the traditional institutions are capped to high net worth individuals and larger folks that have pooled capital for better products. We want to bring all of those products to everyone worldwide.
You guys also have expanded more into the retail side. You bought a company called Ninja Trader earlier this year. Historically, you had been more a home for maybe professional traders. And again, this is an area that some of your competitors are getting into more. Coinbase, for example, is leaning more institutional now. So is that a threat for you guys? How do you think about that competition?
Yeah, I generally don't like the terms when people say retail or institutional. It's as if you're pitting people against each other. And so, what does the average consumer do when they're starting off, like as an entry point? What does someone do when they're, in their midlife of their career? And then what does a high net worth individual do? Like that's the aspiration for everyone, right? Like whatever your asset might be from your job where you get paid a salary plus a bonus and maybe equity depending on how you work. And so worldwide, these things are changing. And so the way in which we categorize our customers is that we started off with an exchange for active traders and professional traders worldwide. They eat the same, they think the same, they read the same, they were educated the same. Purchasing power parity is very similar worldwide. They're the basis and the strength of our liquidity, our global platform, our rails, and they just give us the ability to create all these products for consumers. And so, traditionally people will say retail, but I think of retail as like this transactional model of an individual. It's like, what do you care about? What do I care about? What will my kids care about? And so it's consumers on their journey, and then we build a separate set of products for them that are powered by our liquidity engine or Kraken exchange. And so the interface is different. So we have a app called Krack, which is for sending, receiving, and getting yield, similar to how someone who is a high net worth individual would get. So if you want a 5% yield, hopefully in the future 8 to 15% yield, instead of having millions of dollars to get access to that product, you can have $5,000 or even $1,000. And then for our institutions, what they really care about is custody, safety, security. So we offer a lot of these yield products. So the DATs that we all hear about in the public markets, we support them.
Digital asset treasuries.
That's right. The companies that want to buy and hold on their balance sheet Bitcoin or Ethereum or any alts, we support that too. And then there's these protocol companies that are listing their tokens, we support them as well. So this is not any different than banking and financial services and the institutions that we're used to. We are building institutional products, but they are supported by our customers in the first place. And we consider, as a part of our ethos, free and fair and level playing field. So a professional trader, a consumer, or an institution, when they come onto our platform, they're able to trade, store, save, get products all at equal access.
That's a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet.